Hi, I'm Michael Yardney and welcome to my first property update for 2010. Now, if you haven't already given yourself a New Year's resolution, here's one for you. Take advantage of this early stage of the new property cycle, buy the right property in the right location, and you'll do very well in the long term. You see, the good news is that Santa has brought us one of the presents at the top of our wish list, and that's confirmation that we're going to have a great year in the property markets in Australia in 2010. I see 5 green lights to selectively invest now. So let's go through them. Number one, we've got a stable Australian economy. In fact, Australia's economics vital signs are healthy and it's performing much better than anyone would have expected at this time last year. Remember how we came out of Christmas last year and how nervous we were? Well, look where we are now. And it's ultimately indicators like this, like strong employment, like wages and productivity growth, manageable inflation, that is going to drive our prosperity and drive the demand for goods, including property. But watch out. Every year, an X factor pops out. One of these unknown things pops up and surprises us and our economy. Now, 2 years ago was the subprime crisis overseas and its effect on the world financial markets. Last year, well, there was a number of X factors, but Australia's government's financial stimulus, which comprised of deep interest rate cuts and our fiscal stimulus, that had our market surprised. It surprised us on the upside though, didn't it? And it gave us resilience at a time when almost everyone else was expecting a recession. Now, by definition, being an unknown X factor, I've got no idea what's going to crop up this year. Could be rising interest rates stalling our markets, or maybe further financial problems overseas. Who knows? Something always crops up to surprise us, so be prepared. The second green light that I see that's going to be great for property is increased demand, but a lack of supply of dwellings. Remarkable growth in immigration levels over the last couple of years, plus a baby boom have boosted demand for housing. However, despite a shortage of dwellings around Australia, builders are just not constructing enough new homes and developers are not producing the new apartments and townhouses that we really need to meet demand. You see, the problem is that for most new, medium and high density development projects, that's apartments and townhouses, those high-rise blocks, to become financially viable, to allow the banks to lend, to encourage developers to take a commercial risk, we actually need the end value of apartments or townhouses to rise, by at least 20-30% above current market prices. Putting all this together, a shortage of supply and continuing demand, strong demand, plus increasing cost of developments, we get higher land costs, infrastructure costs, building costs, all this means the value of new dwellings is going to have to rise substantially and soon. This is, of course, going to have a really positive impact on established property prices, the properties you own and I own. The third green light, the third good factor for properties this year is our demographics. Our population is fragmenting. What this means is there's more people living alone. And this means we need more dwellings just to house the same number of people. And at the same time, we're living longer. All of this means more people will be seeking more accommodation, both as tenants and owner-occupiers, and this is going to push up property values and rentals. My fourth point is that rents are going to be strong in 2010. You see, there's a strong demand for rental properties, and this is outstripping supply. And rents have already increased strongly in the last few years. But now we've got record low vacancy rates, and over the last year or two there have been fewer investors bringing new properties onto the market. We've got lower housing starts, as I've already said. Putting all this together means rents are going to rise even further over the next few years. Good news for you as an investor, the rental boom has only just begun. And the fifth point, suggesting now's a great time to get involved in property, is relatively low interest rates. Oh, Michael, interest rates went up, you're saying. They're going up more. I know that. We had 3 interest rate rises last year, and yet there's likely to be more interest rate rises this year. You're right. But we still have relatively low rates compared to long-term trends. So putting all this together makes 2010 a great time to buy property. It's the beginning of a new economic cycle, and it's the early stage of our property cycle. And this offers great opportunities for long-term capital growth. But as you've heard me say before, you've got to be careful, because not all properties will perform well. They won't all perform the same, will they? Our property markets are going to become fragmented and patchy. Some suburbs will outperform and others will underperform. Some houses in those suburbs will increase in value and some will be duds. Now, of course, as interest rates increase over the next year or two, affordability will be one of the key issues that limits property price growth in some suburbs. Affordability will continue falling, of course, because property prices are going up and interest rates are going up, so it's going to be harder to afford properties. But this is going to affect some people more than others. First home buyers and those living in the working class suburbs and the outer suburbs, they're likely to be hit more, aren't they? On the other hand, those who own properties in the more affluent suburbs of our capital cities, these are the sort of properties that have had really strong capital growth in the last few months of 2009. These people are sitting on a heap of equity and they really won't be worried about affordability. These inner and middle ring suburbs are likely to keep performing well again in 2010. And this is likely to lead to a three-tiered market, especially in Melbourne, Sydney and Brisbane. Now, what do I mean by that? See, a three-tiered market is a bit like this. The more affluent suburbs near the city and the water will become even more expensive. And they're going to strongly outperform the averages as owner-occupiers and astute investors chase the small number of properties coming onto the market in those suburbs. Now, as more and more home buyers and investors find they're priced out of these inner ring suburbs, what are they going to do? They're going to start moving to the surrounding suburbs to look for more affordable properties in the neighbouring middle ring suburbs. So these are also going to increase in value, but maybe not to the same extent as the inner ring suburbs. However, the further out you go, if you go to the outer suburbs, this is usually where homeowners are more interest rate sensitive, with currently already many of them are struggling to meet their mortgage repayments. And with the likelihood of further interest rate rises in 2010, property values in these suburbs are likely to languish. So while the news isn't the best for first homeowners and renters, the current property market offers good opportunities for investors who buy selectively. In 2010, as our property cycle moves on, I'm going to keep you up to date each fortnight with the changes in future issues of my newsletter and this video update. But it's also probably appropriate to remind you that if you want to take advantage of the next property wave, no one can help you quite like the independent and unbiased property investment strategists at Metropole. I'm really proud of the team at Metropole because we've again been awarded the best property buyer agent in Australia, and congratulations George Cafantaris from Brisbane, and the best independent property consultants by the readers of Your Investment Property magazine. That's the second year in a row. So whether you're looking to buy, invest, refinance, rent, renovate or build, you're going to benefit from our services. Remember, we have no vested interest or hidden agendas. We've got no properties to sell, but we've got access to every property on the market. So if you want to find out a bit more about what's happening in your local market and what our research suggests is in store, join us at a free property briefing at our offices in Melbourne, Sydney or Brisbane. Just click on the link below and you can find out more and reserve your place. Now, if you'd like to educate yourself a bit more, I'd like you to buy my updated edition of the third edition of my best-selling book, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. Now, over the last 4 years, my book has become a property investment classic, and this new edition gives you updated strategies to take advantage of the new property cycle. Just click on the link below and you can get more details, or you can order your copy today. Now, if you want to keep up to date in between these videos, you can follow my daily tweets about property just by clicking on the Twitter link just down below as well. So we've got a great 2010 ahead. I'm really looking forward to 2010 personally, as is my wife Pam, because it's going to be a great year for property. I'm looking forward to meeting many of you at my seminars that I'm going to be conducting around Australia in March and April. Watch out for those because we'll tell you about that in the next Property Update newsletter.